All right, happy Valentine's Day. Quick market update here. We're going to be taking a look at DXY, then we'll get into Bitcoin, Ethereum, and Phantom. Why are we taking a look at DXY first? This is the dollar currency index. So if the dollar is doing well and going up, that's usually bad for risk assets. If it's going down, that's usually good for risk assets. Guys, this just printed bearish divergence, or has been in the process of printing bearish divergence for the last couple days. Furthermore, this is at its downtrend line, which is a good place for resistance, a good likely place for a reversal of this kind of shorter term pop. So we are seeing DXY in a downtrend, testing its downtrend resistance, printing bearish divergence. This is all a fairly bullish signal. It's a fairly bullish signal. Now, just keep in mind on the daily, DXY has reclaimed the 50 level of RSI, which is bullish for DXY and bearish for risk assets. So this could absolutely break in either direction. However, if we start to see this breaking downwards, we know that that is a signal that Bitcoin, Ethereum, and other altcoins in the S&P 500 can start to run. However, if we break through this downtrend line, that is very worrisome. It's actually very worrisome, and we want to be careful because this could be a signal that DXY is going to go higher and start to put in a retest. We don't have to go all the way up and reclaim the yearly highs or the 2022 highs, but even just another stab up to retest some of these prior levels would probably be quite bad for risk assets. So we just want to be careful. We want to pay attention to any type of trend reversal signals that could be happening. So far, bearish divergence looks good, making me a little bit bullish on risk assets, but we do want to be very careful here. Now, moving over to Bitcoin. Bitcoin, as we talked about, the two potential divergences, bullish divergences that we could be printing on Bitcoin were this one, which it looks like after today's solid daily candle, we may be printing this. We've recovered the 50 level so far slightly, which is bullish. I want to see a little bit more price movement upwards before I say this is just a solid bullish divergence and we're going to be moving onwards and upwards. But it is definitely a possibility if we can get over 50 and stay over 50 here, and price action starts moving up again, that we get a bounce and we continue moving up higher, or maybe even just retesting 23 to 24K, or even 25. The other bullish divergence possibility that would be very, very likely to print if we start to fall downwards from here. Let's say this continues to grind downwards. What we would actually see here is a very likely scenario of hidden bullish divergence printing like so, which would be a really good buying opportunity, probably at or around this trend line, potentially lower, somewhere between 18 and 20K. We can zero in on that specific level if and when we get there. However, in the short term here, a little bounce is a very welcome sight. No surprise coming off of this prior resistance, turning it into support, which again is bullish. My expectation is probably a retest of this prior range. If we can reclaim that, it's very likely that we move higher, in my opinion. However, if we get rejected, right, we want to look to bid lower and bid this bullish divergence if and when it prints. Taking a look at Ethereum, we kind of have three really simple levels mapped out here. Obviously, this one is 1350. It's not only a super strong margin pressure level, risk reward level, psychological level, and structural support level, and prior resistance turning into support in the future. It's a level that it's also our 21-week simple moving average, or slightly below our 21-week simple moving average. It's a level that I would really, really like to bid if Ethereum gets that low. There is no guarantee that we'll get the full mean reversion. However, if we do get the mean reversion, I will be bidding at that level. So we may bounce well before then. We've already started to bounce. We may continue up higher and not see 1340 to 1370, depending on where our 21-week simple moving average is. But if we do, we've got so much confidence there. That's the level that I want to bid. So I'll clear that up. I'll get rid of the easy bands for just a moment. This is just kind of the range that we're in right now. A reclaim of 1700 and breakout above 1700 would probably signal that we're going to head up to $2,000 or so $2,000 is a big margin pressure level. It's actually why we put resistance in there. We also have a big margin pressure level at 2160. I'm not putting the margin pressure levels on the chart right now with actual indicator, just because I'm trying to keep this video relatively short. Otherwise, 1500, this level right here has held. It was our previous consolidation range before the FTX collapse, and it has now held twice. We've gotten a couple wicks below it, but 1500 has held as a psychological level quite nicely. So it could be another level to bid in the future if we pop back down to it. If we lose it, look to potentially bid on the back of this trend line, which would have been another confluent level to bid along with 1500, our psychological level, give or take 1460 to 1500 here. We are now doing what is known as a bump and run pattern, which is, quite a bullish pattern and a very common reversal pattern, right? So we could certainly head up to 2000 from here. We could certainly come up to retest 1700, but I'm also not too inclined to just jump in right now. I'm fairly exposed to the crypto market already. I've gotten some really nice accumulations down here at much lower levels. So I'm happy to continue to ride those levels. And if we see a more bearish scenario or a retest of 1340 to 1370, that's where I personally am more comfortable bidding, somewhere in this region. All right, Phantom. Super interesting here. Phantom looks very top heavy if we throw on our easy bands, right? We know that Phantom, of all cryptocurrencies out there, all altcoins out there, it can spend some time above the red easy band level, but we know in a bear market rally, it's probably less likely to do that. What I'm looking for is for this to end up being a complacency bounce. Right, we've come in, we've made a lower high. So we had a series of higher highs. We broke our trend. We came down. We made a lower low. Right, what I'm looking for is a lower high in tandem with this resistance at around our red easy band level. We also have our psychological level of 50 cents, which we are slightly above right now. If we start to lose that level and head back down below 50 cents, I could see this breaking down. Just looking for a lower high to come in and give confidence to shorting. Not looking to short this on super high leverage, would just be looking, I'm even fine averaging into a short position here on maybe 1x, 2x, or 3x leverage. Nothing too crazy, and then just keeping stops relatively high. I think just a little bit of a reverse investment on Phantom right now, and betting on a mean reversion is probably a decent strategy. Our 21-week simple moving average coming up, right? This would be a level zone of support somewhere around 30 to 40 cents, but currently we're sitting around 51. So there's a solid 20% move back to some of these support regions. You can actually see right now we are struggling to break through our prior resistance there. Right, so Phantom looking to potentially short, Ethereum looking to long if we come back down to 1340 to 1370. Bitcoin actually looking pretty solid in this bounce, but would be more interested down somewhere between 18 to 20K. Overall, looks like we are going to get continuation as long as DXY gets rejected from this resistance level, this downtrend line. Guys, I hope this video was helpful. In other news today, guys, I got $1,000 airdrop, Blur airdrop. This is something that we talked about in the Discord. It was posted in the plays section of the Research Hub for some time before I changed up the formatting to the Research Hub airdrop guides. Guys, 8 airdrop guides in here for you to come and do once you sign up for the Research Hub. Guys, $1,000 is not life-changing money for the vast majority of people, but it's not nothing. It is not nothing, and there's no guarantees that these airdrop guides will result in $1,000 airdrops. But Blur paid me $1,000 to do NFT transactions, NFT sales on a NFT sales that I was going to execute on OpenSea anyways. So just by switching over to doing them on Blur, because I was aware that there was an airdrop going on, and taking some very simple steps, they paid me $1,000. It's absolutely crazy, and the price is actually up, so it's actually over $1,000 now. So guys, the whole idea here with these airdrop guides in the Research Hub is to simply help people pay help the research hub pay for itself. Obviously, there's no guarantee of returns, but these are generally low risk opportunities as they require very little and sometimes even no capital to participate in these airdrops. So in the research hub, you also get access to these deep dive research reports, some shorter one pagers, which I refer to as plays, some educational content, and you also get access to the margin pressure levels indicators, the easy band indicators, the risk reward indicators, all in TradingView. Once you sign up, you'll just submit your TradingView username and we'll get you access. So go check out the research hub or go check out Sistine.ai. There's a link in the description below. If you're interested in trading on leverage, there is a link as well to Bybit. They have some sort of sign up bonuses. I don't keep track of their sign up bonuses because they change them every month, but I do prefer Bybit. If you're interested in trading on leverage. Guys, thanks so much for tuning in. Drop a like and subscribe if you enjoy this content. Catch you next time. Peace.